Don't even think about selling your Bitcoin. Even though I haven't sold mine, I believe that a 3-month period of sideways movement is completely normal. I don't have any strong opinions about the current market conditions. In fact, I've come to realize that I have no opinion on what Bitcoin will do in the next month. I'm just not focused on short-term fluctuations.
When it comes to Bitcoin, it's crucial to maintain a long-term perspective and not get swayed by short-term market fluctuations. Selling your Bitcoin based on temporary market conditions can lead to missed opportunities in the long run. Even though the market may seem uncertain right now, I believe that holding onto Bitcoin is a wise decision. Bitcoin has a history of experiencing periods of volatility followed by substantial growth. A 3-month period of sideways movement, where prices appear to stagnate or fluctuate within a narrow range, is completely normal in the crypto world. These periods of consolidation often serve as a foundation for the next phase of upward movement. It is important to recognize that the cryptocurrency market is still relatively young and is subject to various influences, including macroeconomic factors, regulatory changes, and technological advancements. These factors can lead to unpredictable short-term price movements that do not necessarily reflect Bitcoin's long-term potential. Over the years, Bitcoin has demonstrated resilience and the ability to rebound from downturns. Its decentralized nature and finite supply make it an attractive store of value, akin to digital gold. As more institutional investors, businesses, and individuals recognize its potential, Bitcoin's adoption continues to grow. One key lesson I've learned is that trying to predict Bitcoin's short-term movements can be challenging and often unproductive. Instead of focusing on what might happen in the next month, it's more beneficial to have a long-term strategy based on fundamental beliefs about Bitcoin's role in the financial ecosystem. By maintaining a steady course and avoiding knee-jerk reactions to market noise, you can better position yourself to benefit from Bitcoin's long-term trajectory. Whether it's for wealth preservation, portfolio diversification, or potential appreciation, holding Bitcoin can be a valuable part of a broader investment strategy. In conclusion, while it's natural to be curious about Bitcoin's short-term prospects, it's essential to remember the bigger picture. The current period of sideways movement is part of the market's natural ebb and flow, and there's no need to make hasty decisions based on short-term volatility. By staying focused on the long-term potential of Bitcoin, you can navigate the market with greater confidence and clarity.
Subscribe our channel and press the bell button to get our video notification. And like the video.
There was a period where you could have been entirely out of Bitcoin until around September or October, and you would have captured 85% of Bitcoin's appreciation just by being there during those 3 months. You could have skipped the first 3 or 3.5 years of Bitcoin's existence, bought in September 2013, and exited by January 2014 to capture most of its value increase.
Bitcoin's price history is filled with significant fluctuations, and there have been periods where strategic timing could yield substantial returns. One such window occurred in the latter part of 2013, which illustrates the dramatic potential for gains within a relatively short time frame. During the early years of Bitcoin, from its inception until mid-2013, the cryptocurrency was still largely under the radar. While Bitcoin's value increased during this time, much of its explosive growth was concentrated in a short period. Specifically, if you had avoided holding Bitcoin during its early stages and only entered the market in September 2013, you could have captured an impressive 85% of its appreciation by exiting in January 2014. This period was characterized by rapid price increases, driven by a surge in interest and adoption. In late 2013, Bitcoin's price skyrocketed, attracting attention from both individual and institutional investors. This price surge was partly due to increased media coverage and growing recognition of Bitcoin as a revolutionary financial technology. The spike in Bitcoin's price from September 2013 to January 2014 underscores the volatility and potential for rapid gains in the cryptocurrency market. However, it also highlights the challenges of market timing. Identifying the exact entry and exit points to maximize returns requires not only market knowledge but also a fair amount of luck. This historical perspective emphasizes the importance of understanding market cycles and the impact of macroeconomic factors on Bitcoin's value. While short-term trading can lead to significant profits, it also carries substantial risks. The volatility that allows for rapid gains can also result in steep losses if the market moves against you. For most investors, the focus should be on the long-term potential of Bitcoin. Its finite supply, increasing adoption, and potential as a store of value make it an attractive asset for long-term investment. While strategic timing can enhance returns, it is essential to balance this with a broader investment strategy that considers risk tolerance and investment goals. In conclusion, the period between September 2013 and January 2014 is a compelling example of Bitcoin's potential for rapid appreciation within a short time.
The number of Bitcoin wallets holding at least one Bitcoin has been increasing rapidly following a power law distribution. This indicates that Bitcoin adoption is growing significantly. While this growth in the number of Bitcoin holders is substantial, it's not quite keeping pace with the rapid increase in Bitcoin's price, which is a normal market dynamic. Generally, the price of Bitcoin tends to rise faster than the rate at which new users adopt it. The power law growth in Bitcoin ownership reflects a strong and expanding interest in the cryptocurrency. As more individuals and institutions acquire and hold Bitcoin, the overall number of wallets with significant holdings continues to rise. This trend is a positive sign of increasing adoption and acceptance, even though it lags behind the price movements.
The number of Bitcoin wallets holding at least one Bitcoin has been increasing at a remarkable rate, following what is known as a power law distribution. This pattern indicates that Bitcoin adoption is expanding rapidly. The growth in the number of these wallets is a strong indicator of the rising interest and investment in Bitcoin, reflecting a broader trend of increasing adoption across various segments of the market. However, it's important to note that while the number of Bitcoin holders is growing significantly, this growth is not keeping pace with the rapid rise in Bitcoin's price. This is a typical market behavior, where the price of an asset, such as Bitcoin, often experiences more dramatic increases compared to the rate at which new users or investors come on board. The discrepancy between price growth and the rate of new holders is a normal aspect of market dynamics. Bitcoin's price tends to appreciate faster than the rate of new user adoption due to several factors. These include speculative trading, institutional investment, and overall market sentiment, which can drive price increases independently of the actual number of new users. As the price surges, it often attracts more attention and investment, but the onboarding of new users usually takes time to catch up with these price movements. The power law growth in the number of wallets holding at least one Bitcoin is a clear sign of increasing acceptance and interest in the cryptocurrency. It reflects a growing base of individuals and entities that see value in owning and holding Bitcoin, despite the price volatility. This expanding base of holders contributes to the overall stability and long-term viability of Bitcoin as an asset. Moreover, this growth in wallet numbers suggests that Bitcoin is becoming more ingrained in the financial ecosystem. As more people and institutions adopt Bitcoin, the market's infrastructure, such as exchanges, wallets, and payment systems, continues to evolve and improve, supporting further growth and adoption.
Subscribe our channel and press the bell button to get our video notification. And like the video.